Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Today we're going to be talking about one of the most important things that you can master. I received a lot of questions to go over this, and I'm going to just reinforce the critical nature of understanding the templates, the weekly template, and the identification of the best trade setups. Not trying to read the direction of every little move and, catch this move and catch that move and catch this and buy the low and sell the high. I'm talking about identifying scalable best trade setup opportunities. And I always joke because I like to say hindsight pays, because the more you understand the template, the more patient you will become and sit back and wait for scalable 5-star opportunities, whether they're in Asia, London, or New York. We're going to go over just a couple of templates. I'm going to reinforce that you go and plow through as many templates as you can to understand the day count. We start the week on a Monday. Forget about everything else for now. We'll just talk about there's 5 days, a new template. When Monday starts, we have the opportunity to identify a template setting up for a best trade candidate in the session that we're trading, whether that is a session scalp or we could be getting, again, a stair-step opportunity, day 1, day 2, day 3, for a possible large 5-star capitulation, the type of trade that goes parabolic. Now, we can have parabolic moves on the front side. We can get a day 1 and a day 2 parabolic trend trade. We can get a day 3 parabolic trend trade. It might be in New York after news, but it can be an easy, low-stress session trade. But we can still get maybe, again, a 5-star blow-off move. It may be a first bounce opportunity after major red news. It can be any of these. But understanding these templates allow us to position ourselves maybe in Asia for a day 2 parabolic trend trade. It could be in day 2 or day 3 for a parabolic move after a first red day in Asia. It could be a parabolic move after a first red day and Asia puts in a high and a lower low in London, pumps it up. We can get the parabolic move in the US session after a first red day. It can be a day 2 trend trade. But unless you master these templates, you'll still be caught in this cycle of I bought the low and I got stopped out, I sold the high and got stopped out, and you're chasing all these movements in the market based on these crazy ideas, which if it's, again, I always reinforce, if it's working for you, keep doing it. But I'm talking about the opportunity of where you may be able to scale into a market that's going to blow off, whether that's in the long direction or the short direction, and it's not coming back, or it's going to move very fast for an easy 50, 75, 100 pip move or more in the session that you're trading. These are the parabolic type of moves that set up over day 1, day 2, day 3. It can be a 3-session setup. We can have an opening range that puts in a peak formation low. We can get a day 2 and a day 3 trend trade. We can have all different types of scenarios, but coming back to the playbook, yesterday's high and low, the opening range and initial balance, when a new week starts, timing, when a new month starts, we will get large parabolic moves. We'll talk a bit more about that in the coming videos. We can have 3-day setups, Monday, Tuesday, Wednesday. It might be Tuesday, Wednesday, Thursday. It might be Wednesday, Thursday, Friday for a large parabolic move. But there are 3-day nonstop continuous cycles. The opening range and initial balance are critical, though, to establishing your thesis heading into the new week and then identifying day 3 longs, day 3 shorts. There are subtle variations in Monday's opening range, which I will be doing a more advanced video on and putting it into the library in the course, in the playbook course, because there are specific types of days, and that leads us to understanding day 0 setups. You can have days that establish a day 0 setup for a parabolic trade the next day that is a 3-session setup on a day 2 or a day 3. Big thing to understand, though, is when we start a new week, we start a new template for that week. Monday, Tuesday, Wednesday, Thursday, Friday. And some weeks we may not have anything. We may just have a market that moves. So we look at different instruments because we're looking for opportunities that might give us a day 1, day 2, maybe an inside day, day 3 for a vertical move. It can be all different types of scenarios. Let's take a look at the charts. Now we'll look at a couple of different instruments, but we'll look at gold and just also painting a scenario of when we stay contained in a trading range within a high and a low. Our opening range is set on the Monday. There's our initial high and low of the week. We do not have any new breakout traders in the market. We are on day 3 down. We have shorts obviously in the market from the break of Friday's low. The break of Friday's low establishes that breakout traders, longer time frames, daily, 4-hour, maybe even weekly, potentially may have stops at the low of the week. We have breakout traders in the market. An example of a day 3, a Monday opening range new week, our initial high low, where traders may have participated in shorting within the day, but we're talking about the template itself. So we have our opening range, which in initial balance, we're talking about the close of the day. By the time day 2 has traded, we have an 80% of the time or greater. One of these two extremes will tend to hold. At the close of day 2, our Tuesday, we have shorts in the market. Who is in the market at the close of day 2? We have longs in the market. They come down. We don't have any breakouts. It's an inside day. Inside day, false breaks, trend trades on page 69. Day 1, day 2, day 3, nothing's happened. We have a double inside day, but we break the low on Thursday. So we have day 1, day 2, day 3, no stair step formation, no ideal best trade candidate setup other than session trades because we are now in a trading range. So coming back to the 3 things that markets do, they break out and trend. They break out, fail, and reverse. Or they stay range bound in a trading range. And as one trader said, no, they only go up and down. That's fine. We have 3 scenarios that can play out. But they are no breakout traders within the new week itself until we get to our Thursday. Thursday gives us our day 1 longs. Now remember, we have a 5-day template. Day 1, day 2, day 3, nothing happens. So we start our count again. And we break out on Thursday. We have day 1 breakouts long, the stop at the high of the week, and we have an engulfment. Now we could potentially have a first red day candidate that pumps up and fails later in the session. So again, no ideal best trade 5-star opportunity in our timing window. And this is what I'm trying to explain to traders is that not every movement in the market has to be traded. You know, I bought the low, I sold the high, all that stuff, but I'm talking about scalable parabolic moves. So we have our failed breakout from day 1. So remember, when we break the high of a day, that other side of that range may be an area now where the market will be targeting. And we have a blow-off move in the Asian session, day 1, day 2, day 3, in our new week. Our new week. So coming back to our new week, we've broken out and failed. Peak formation low. Who is in the market at the close of day 1? We have longs in the market. Now we don't have breakout traders outside of the range, but we've definitely broken the high and triggered new breakouts, and we have broken the high of the day. And now we close as day 1 longs. Day 2 longs are in the market. Just highlight this. Day 2 longs are in the market. Day 1, day 2, day 3, again, market reverses and closes as a doji, technically a possible first red day opportunity, first red day. Peak formation high first, engulfs and reverses, closes below the open. This, by all intents and purposes, can set us up for a first red day parabolic short trade. Day 1, day 2, day 3, our new template again on our Monday. So we're talking about how the day closes. So for the hindsight haters out there, I'm going to repeat this. I love this phrase. Hindsight pays. Day 1, day 2, day 3 will typically blow off in the direction of the trend. We have shorts triggered into the market. I always say there's only 2 types of trades, pump and dumps, and dump and pumps. Day 3, high of day, vertical move in the U.S. session, no news on the calendar. But we have a market now on day 1 that has broken out and closes as a breakout day. On day 2, who is in the market at the close of our initial bounce? Remember what I said, 80% or more of the time, one of those 2 extremes will tend to hold. Study the Mondays and understand when they split a day. Peak formation high, peak formation low. That is the day 0 setup. But we have our day 1, day 2, who's in the market? Who is in the market at the close of day 2? Day 2 longs. Day 3, parabolic trend trade in the Asian session for a vertical move into the open of Asia. Day 1, day 2, day 3. That market pulls back, and we had major red news that went vertical through the high of the day and reversed in the New York Open. We have day 2 longs in the market now. Day 2 longs in the market at the close of the day. Remember our opening range, initial balance, day 1, day 2, day 3 longs, parabolic move U.S. session, trend trade on day 3, the parabolic setup. This is a 1-hour chart, but we have day 3 longs in the market. We have a market that goes vertical and reverses into the London session. Who is in the market? Who is in the market? We have day 3 longs trap now up top. We can move our death line up underneath the bodies of these candles, the lower inside high that has gone vertical, peak formation, lower low, lower high, into our New York open window, major red news at 8:30, peak formation high. That is the setup for the pump and dump for the vertical blow-off move after major red news. There was first bounce on the 1 minute. There was a 5-minute opportunity. Continuation first bounce on the 5-minute after the New York Open for a vertical blow-off move. And again, this is the perfect template. Day 1, day 2. We'll just remove this line. Day 3. But it's imperative to go back and study the Mondays. Understand when you have peak formations. Understand when you have inside days. We can look at the Swiss franc quickly. We have a market that goes vertical on our Monday. Day 1 longs in the market. But that reverses and breaks down. Breaks down below of the day of London inside the low of the day. Who is in the market at the close of the day? We have shorts in the market. We have a low of the week. Day 3, parabolic blow off on the news, first bounce opportunity, and now possibly a measured move opportunity. Master these templates. This sets everything up for the session, for identifying the best instrument for the best trade candidate in the playbook, the best trade setups in the session that you're trading. We're talking about targeting parabolic opportunities, not, I sold the high, I bought the low, I sold the high. I'm talking about scalable, parabolic moves in the market. Keep it simple, traders. 1% better every single day. And may the markets go with you.